Costco is currently sitting at its all-time high after recently beating the earnings predictions of the analysts in their latest quarterly reports, and they have just announced a new special dividend coming at the end of December. So, is it a good time for you right now to invest in this company? This is the question that I'll be answering in this video, where I'll be doing a full stock analysis on the company Costco. As always, I'll start by analyzing what is their business model, so how are they able to generate their income, and after I'll make a quick fundamental analysis followed by price prediction with multiple valuation models to determine what is the true value of this company. Without further ado, let's dive right into it right now. Costco is currently the third largest retailer in the entire world with a market cap close to $300 billion and some quarterly revenue in their latest quarterly earnings report of about $60 billion. This company, founded in 1973, that is mainly located in the US and in Canada, is often regarded as one of the cheapest places to go shop if you're looking for a great quantity of excellent products at the lowest price possible. How are they able to generate a lot of profit despite offering products at some super cheap price? No marketing campaigns and no special decorations in their stores. Their objective is to offer the best quality price ratio to their customers. To do that and to achieve their quest of being profitable, they notably offer a service of membership to their clients and to businesses to have access to their warehouse. Indeed, the main difference between Costco and their main competitors is to shop at their place. You need to be a Costco member. This means that annually you'll need to pay between $60 to $120 to be a member of this business. It might not look like a lot for what it gives, but if we multiply the average cost of a membership, which will be set at $90 per membership, with the total numbers of members, which are about 130 million members all around the globe, well, it is still giving about $12 billion of revenue annually without having sell anything yet. And so the attractiveness of the membership cost for every member is one of the reasons why you see a lot of people shop at Costco. And another reason is that with their business model that is focusing on offering wholesale price for merchandise, it makes that their members always have the lower price when they shop at their warehouse. And so it makes Costco way more attractive for customers compared to the classical supermarkets or grocery stores. The main secret to Costco's success is coming from the fact that they are able to directly shop and buy merchandise from their manufacturers, and so this limits the store hours of operation and it minimizes the labor costs by also having an important economy of scale. It makes that when you are buying at Costco, you are only paying for the true value of products and not for the overall environment of the stores. And as any great retailers, you can find pretty much anything in their stores, from food to electronics, passing by beauty products. And so, as you can understand, the good news for the investors is that regardless of macroeconomic conditions, this type of business model will continue to perform quite well over the next couple of years. It means that even right now, while we all know that the cost of living has dramatically increased over the last couple of months and years, people will always be looking to buy their essential products at the cheapest price possible. And this makes a company like Costco particularly interesting for the potential buyers. This trend has been confirmed in their more recent earnings report, with a total increase in their net sales of about 6.2% to about $56.72 billion, while the membership fees revenue jumped 8.2% to $1.08 billion. And these two increases have helped their total revenue to grow by 6.2% to about $57.8 billion. These news came out with the great growth in their earnings per share in the latest quarter that grew by about 16.6% to about $3.58 per share. Plus, we've also seen that recently, many analysts have increased their price target for Costco, where UBS increased it by $85 to $725 per share, and where Jefferies raised its price target to $725 from $680 previously. To add to all of these positive news, we've recently seen that Costco has just announced a special dividend of $15 that will will be giving to any investors that is holding the stock as of the 28th of December 2023. At the current price of the company, this would represent a 9% dividend that will be distributed as of the 12th of January 2024. These types of special dividends are there to reward the investors for all the financial success that Costco has had over the last year, where it has gained about 50% of value. So if you want to receive this massive dividend, this could be your chance to purchase some shares of Costco before its ex-dividend date. But first, let's see if this company is truly worth your money right now. Costco currently worth about $292 billion, but it has a super high price to earnings ratio of about 45, which is showing that with the massive increase in the valuation of Costco lately, this stock would currently be overvalued with this indicator. But when we look at the price to sales ratio of only about 1.19, it is showing that the stock on that side would be currently undervalued. In terms of the profitability of the company represented by the profit and the operating margin, we can see that they have some super tight margin because they are selling products at some super low price. But on the upper end, over the last 12 months, we can see that the return on their equity has been incredible, with some return of about 27.37%. Throughout that period, they've also been able to generate some revenue of about $245 billion, with some interesting quarterly revenue growth in their latest quarter, as I told you earlier, of about 6.20%, and some quarterly earnings growth of about 16.50%. Another excellent news for Costco is the amount of cash that they have, which is close to $18 billion compared to less than $10 billion of debt. And with a debt to equity ratio of about 35%, it is showing that the company isn't too much affected by the hikes of the interest rates. In terms of the volatility of the company represented by the beta on a 5 year period, we can see that the company is quite less volatile than the overall market, with a beta of less than 1. Nevertheless, we can still see that over the last 52 weeks, it has almost doubled the performance of the overall market, with some return of close to 44%. Plus, in terms of their dividend, which is paid on a quarterly basis, and that usually represent about $4 per year of dividend income, or if you prefer about 0.62%, it is quite lower than the special dividend that is coming up at the end of December of about $15 per share, or 9% of dividend for the overall year. However, with this super low dividend yield, you can see that its payout ratio is only about 27%, which is showing that they still have some great room in the future if they want to grow this dividend even more. And despite the pandemic and many knockdowns over the last couple of years, we can see some great progression in their total revenue over the last 4 years, which has also been reflected in the total earnings progression throughout that period. However, in terms of their operating cash flow, after seeing an important drop in 2022, we can see that it has regrown quite importantly in 2023, which has been pretty much the same in terms of their total free cash flow throughout that period. Now, to determine what is the true intrinsic value of this company, I'll be using many different valuation models, starting as always with the Peter Lynch valuation model, which is a simple formula when you add the future growth of the EPS with the dividend yield and that you divide with the total price to earnings ratio. But when we don't include the special dividend and that we keep its current dividend yield of about 0.65%, we can see that the results would be showing that this company would be quite overvalued at the moment. Unfortunately, for the second model, which is a dividend discounted model, we won't be able to use it since we can see that our average growth rate is bigger than our WACC. But for the third model, which is the discounted cash flow model, where we will simply discounted all the future cash flow of this company to determine what is the true intrinsic value of it, we'll start by finding what is our weighted average cost of capital by simply calculating what is the cost of debt, the cost of equity, and the cost of debt and equity. After, with the projection of the future free cash flow, we can find that the true intrinsic value of this company is about $376 per share, which is showing an upside of about less 42%, or a sell, which means that the company would currently be overvalued on that side. And finally, with both Graham's original value formula and Graham revised value formula, we can find that in both cases, the stock would currently be quite overvalued. As you can see, despite having a super strong business model that can face any type of macroeconomic conditions, well, this company has gained a lot of value in 2023. Obviously, with all the value that this type of company has gained over the last couple of months compared to their total financial performance, years. This has made that all the valuation models have determined that this type of business would currently be overvalued. Now, if you want to know if it is a good time to purchase this company at the moment, it only depends on what are your objectives. If you want to earn and enjoy the high dividend, it might be a great time for you to buy the stock before of the 28th December. But personally, since I am a big value investor that is always looking for the best undervalued stocks to buy right now, unfortunately, in my opinion, this type of stock is quite overvalued and not really interesting to buy at the moment. Nevertheless, in the long term, Costco is still a very solid company to invest in. But on your side, if you want to find what are the most undervalued stocks to buy before 2024, well, check out the video that's gonna be right over here, and I will see you soon. Peace!